in the start of the day, it's a new day, all right, and I've done all my other activities outside trading, probably like having a brush, having to brush my teeth, and then cleaning, and then probably eating before the start of the session. Okay, so here in my time zone, we London session is 9. Okay, so in my time zone, okay, so I go over to the start of the session, and then that's where I start my trading. Okay, I don't trade before the session, and I don't trade at the close of a session. Okay, so I trade in the session. Okay, so I plan my trade before the session, and then I execute it in the session. Okay, and what I want to do first is, before starting my trading day, I have 3 things I do. Okay, 3 things I do. Number 1, I go over to Forex Factory calendar and then check for the current day. For the current day, today is Friday. For the current day, I want to see that what happened, okay, before now. All right, so what happened before now was we didn't have a major news on Thursday or Asian session, because if we have that, we could expect that either AUD or NZD might either be going up or coming down. All right, so it could also, AUD or NZD could also be strong or weak during the session. All right, so what we have is AUD and NZD is just maintaining technical setups. Okay, it's just maintaining technical movements, and there are no fundamental backing, or there are no unusual activity that also happened during that session. So I have it more of like that is stable. Okay, so if I have it that USD or AUD is max going down, I want to look at my indicators. Okay, I pointed out before, you can go over to check, point out those indicators which I use in my trading. Okay, I'll go look at it. All right, how far down have we fell in the day? Okay, so if we go down, say if we go down minus 1% on the day, all right, I wouldn't be looking to take sell opportunity. I wouldn't be looking to sell trade. I wouldn't be looking to trade this at all. Okay, because we've gone maxed out. All right, we've gone from sell position to maybe take profit area. Okay, so whatever could be happening here could be little participants trying to make some bucks off it, and the market could just also be playing for the remainder of the period. Okay, because we have majority of the trend in the direction. Okay, so when I look at this, it gives me an idea. Okay, it gives me an idea of what to do next. Okay, so I know that I have the next major news, which is the red news, because I look at the red news. This is the medium news, okay, because this will create a medium volatility. Okay, so I look at the red news because the red news will create high volatility. Okay, so these are highly volatile news. I look at this one here, and I then have a picture of it on my mind. Okay, so we have this during New York session, so I know that I have a big news coming in New York session, and whatever I'm going to be doing during the start of London session, ahead of New York session, I want to be either waiting to take a big move on CAD and also maybe on USD, because we have the NFP, and this is one of the biggest news also in Forex history as well. It affects all the markets, all right? It affects all the instruments as well. So I want to wait, okay, for a setup like this. I want to wait for this time to take a news, okay, a trade after the news, okay? And I could also waiting to set up my trading plan. Okay, so let's just go over. When we look at the chart, then we would see if we have a tradable plan, all right, before the news. Okay, so if I have a tradable plan before the news, I would take it ahead of the news. If I don't have a tradable plan before the news, I will wait till after the news before I can wait for more setups to, all right, present itself. Okay, so you want to be patient. You want to take your time, because patience is one of the important factor in trading. All right, there are times which waiting is a strategy. Okay, waiting is one of the hardest strategy in trading that most traders ignore. All right, so if you want to be successful, you must be able to master the art of waiting. You must be able to master the art of planning and then waiting to execute. You must be ready to master execution and waiting for targets to be achieved. Okay, you want to be waiting for price to move, then you can then put your trail stop. Okay, so you want to patience patience is very important. Okay, so I look at this first and I have an idea of what news I have coming ahead. All right, so I then go over to investing.com. What I look at for investing.com is not random news. I don't look at random news. I don't look at what chart analysis someone is saying. All right, because here are all analysts. Okay, I don't look at what they're saying. What I look at doing is I look at looking at for the important news. Okay, because this also sends me a signal very fast to be able to see what the major indices are doing. Okay, this sends me a very strong signal immediately to see what is happening, and I could just see at a glance that, okay, apart from the fact that gold has gone up 0.3%, so which means I would look at that gold was more of down initially and then gone up 3%, or could have been up, then gone up 3% on the day. Okay, so that's, I see that as well for this one here. And also what I look out for is a sudden shift in market news. Okay, I look at market news, what's also happening here. I could also see that we have European stock futures, okay, higher caution ahead of okay, payrolls and Omicron news. Okay, so this is not my concern. All right, this is not my concern. The news is telling me what happened. Okay, the news here is telling me what happened, because for this to be a news, it must happen. Okay, it must, it's something that happened before. All right, that was why this person, okay, Peter Norris, was able to gather this information from a research. So it's more of a news, not what will happen. Okay, so news tells you what happened. All right, you want to look at technical analysis. Technical analysis will tell you what is happening, and possibly if you're using the Elliot wave, it will tell you give you a possible area where the next thing will happen. Okay, so it will tell you when the correction will be complete, when the next impulse will start, and when the impulse is done, and when we're going to start looking for correction. That's what the Elliot wave will show to you. All right, so you must be able to work with a trade strategy or a system that able to give you an edge in the market. All right, so I look at that as well. I go ahead to see also what could also go wrong today. And we also have it that we have dollar edges higher ahead of BEM. Okay, this is not my concern. Win trip, this is not my concern. Or rebound, this is not my concern. Okay, so this is my concern. Okay, this is my concern. Okay, I look at here, what happened here, all rebound. All right, so it gives an idea that we probably would have been having oil down on over some period. Okay, it gives an idea. And if I go over to see, we have WTI trading 68. So most especially, I could be having an idea, say maybe just this is falling from 82 or 80 area down. All right, so for a rebound, which means for a plus 2.59%, and this caused this a rebound yesterday, which means oil is more of taking a breather. Okay, or could be in the next move to upside. So when I have this, I could be looking at CAD. All right, the very first thing I look at is CAD. Okay, and I know that one of the things I want to be doing first in the day, I want to be taking consideration of the CAD. More importantly, all right, as one of the key currency I want to be looking at in the day. All right, so I'm going to be looking at pairs that involve CAD. Okay, I want to be looking at currency pairs with CAD as one of the constituent pair, or one of the pairs that make up that one of the currencies that make up that pair. All right, so I look at next. Okay, US dollar on face by Omicron. All right, that's crazy. I don't want to read that. I don't have the business with that. It's a do or die time for global market. It's not my concern. What's do or die? Who is dying? Who is doing? All right, I don't give a F about that. All right, I don't give an F about that. All right, so we're done with those ones there. All right, we're done with some news there. All right, what we could possibly have as news, all right, coming in there. There are also other sites we could also look at, probably for news, but I'm not really a fan of news. All right, I just give this me an idea of what is happening in the market. All right, so what I want to do next, I want to go over to TradingView. Okay, I want to go over to TradingView, and first I want to identify the very first key thing you want to identify in the start of your trading day is what the dollar is doing. All right, you want to look at the DXY. DXY is US dollar currency index. You want to look at the DXY, okay? What is the DXY doing? All right, so if you have the DXY to be strong or to set up to be strong in the day, all right, you will be expecting that possibly just possibly, you could be looking at other currencies going down. GBP, Euro, AUD, NZD, all right, would possibly, but most especially, these two may just be having 70 to 80% chance or probability of having a bearish day. You can have DXY up and you have NZD USD up at the same time. No, it's more of a case that you would have a very hot day and you have thunderclaps. Okay, you have thunderclaps. Okay, you wouldn't be having thunderclaps on a very sunny day. All right, you wouldn't be having snow fall, or you won't be having snow on a very hot day. All right, so you want to see that two things come together. All right, you want to see that two things come together. So we are having a very cold morning. You can expect that snow. You could be having snow. Okay, you might just be having snow. All right, there's a possibility for that happening. All right, say we're having raindrops, then we could be having thunder slaps. All right, thunderstorms, we're having that. All right, so we have a very rainy day. Okay, so this should be what gives an idea. All right, you want to look at, you don't want to find that DXY is breaking new highs and you as a trader in the morning, all right, what you want to do in that trading day, you want to start buying AUD. No, you can't do that, okay? Because this, you've already put up yourself by your trading plan. You're already wrong for the day. Okay, you're wrong for the day. All right, you are wrong for the day. All right, you don't want to be having this on the day. All right, so you want to be looking what is other things doing, possibly the stock market. Okay, so we have that the stock market is still red on the day. Okay, and we also have it that also Nasdaq is also red on the day because we've gone down minus 0.32%. We have Dow Jones also minus, so we have Nikkei also plus. Okay, Nikkei is only plus. So when Nikkei is plus, when Nikkei is appreciating on the day, you could expect that JPY could be facing challenges in the upside with respect to this, because it defines for you what is happening. All right, so with this, you are already able to have a picture in your mind what kind of situation you are expecting the market. All right, so you understand that also in my previous video, which I spoke about risk on and risk off mastering, you have an idea in your mind that today we are having a risk off market mode. Okay, it means that investors are taking their money off risky asset and putting them on safe haven asset. All right, so if investors are taking their money out from risky asset and then putting it on safe haven assets, that means on the day you want to be looking at USD going up. You want to be looking at JPY going up. You want to be looking at CHF possibly going up. Okay, so in these days you want to be looking at that possibility. Okay, so you look at next, I would also look at VIX and then see what also is happening here around the VIX and the TLT to give you more clarity. I'll look at the VIX. Okay, I look at the VIX. All right, so if the VIX is going down, if the VIX is going down, that is risk. Who knows what this? All right, so if the VIX is going up, what's that? All right, okay, so I want to just take a few minutes and then allow you be able to picture that. If you watch that previous video, that should also give you an idea. All right, so if the VIX is going up, what we have for the day is risk off. Okay, the VIX is going down, we have risk on. All right, so we've seen that majority of the week we've seen VIX up. Okay, apart from the fact that VIX is also starting to a little bit of drop in the day, start of the day, we could expect that this could also be a correction. Okay, so until VIX breaks a serious lows. Then we could look at VIX going then down, and then we could look at risk on. Okay, but we have risk off market mode. All right, so we just go ahead and see what else is happening with treasuries, what treasuries doing. And we've seen that treasuries is also TLT is also going up as well. And we can also expect that if treasuries is going up, we can also expect that for government bond should be going down. All right, and that's also playing out nicely. All right, so for TLT to be going up, bond should be going up. All right, bond should be going up and yield should be coming down. All right, that should be yield should be down. Okay, so but in this case here, this is not defined. All right, this is not giving us an idea of what is happening because we found more of in the week yield has been flat. Okay, more of flat having gone down. So but overall we can then expect from the fact that VIX is flat, but VIX is more of in a downtrend. Okay, because it's making series of lower lows, lower highs, and for our yield is down. So when yield is down, you can expect bond to be up, and that bond, when bond is up, you can expect that that's more need for USD. Okay, no more need for flight to safety. Okay, yield down, bond up, flight to safety is activated, and you can expect that USD would be going up. JPY should be going up as well. All right, so a little trigger could also spring into life, JPY in the day. All right, so we go over to seeing what chart we have. All right, so you want to have a well-detailed chart such as this one. All right, you want to have a well-detailed chart such as this one you have also been following for quite a while. All right, you don't want to be having charts. I don't wake up in the morning and I just step into the market and I take any trade or I take any setup I see. Okay, I don't just take trades because I don't just wake up in the morning and I decide to add. Maybe, just maybe, I don't have I have originally I have USD Chinese yuan also in my chart, which also I labeled before now, and I was also looking at it. All right, I was also looking at it because it was one I was planning for. Okay, and I could also see that we are more of in a downtrend for USD Chinese yuan. All right, so I don't wake up in the morning and I don't have a chart on. I don't have a currency pay or an instrument I'm looking at, and I just wake up in that morning and then add it. All right, because of say a news or what I felt overnight. All right, I don't just dream. All right, say I don't wake up in the morning and say, okay, today I just want to feel like looking at what is happening on USD Singapore dollar. All right, and I go ahead then customize it this way, GW Pro, and I put it up. Okay, and immediately I put it up, I would also first identify that price is going up. Okay, I don't really understand. I wouldn't understand what happened here because there could have been a time I was planning a certain trade here and that did not play out and I was expecting to get here. This fell. So I don't really understand. You wouldn't really understand in a flash what happened. All right, you wouldn't really understand the fundamentals, what news came in. All right, so for a trade you've been following for quite some time, I know that AUD could have been going up until maybe CPI. All right, CPI, then AUD might have been going up. Okay, because many of the times which I follow the market as well, I keep track of activities, I keep track of events, I keep track of what is happening. All right, I don't want to start buying this because one, I expect that USD should be strong and I just come in here and I buy. No, I don't do that. Okay, and for this one here, you don't want to buy that. All right, so because I have AUD and we could be having that CPI could also play a big part, and then we could have AUD start to go down because of CPI. I will take note of that environment that created a reaction on the CPI. All right, once price goes back into that territory, I will not be looking to do anything around there but only to sell because I found sellers there. And you have price coming to this territory and continue going up. Definitely, for me as a trader that kept track of all these informations, I know that whatever sellers happened here was because of fear of the CPI, maybe a very bad CPI or some sort of good CPI, whatever news, because news on its own is a catalyst. Okay, news doesn't really change. Some news doesn't really change overall market trend. It might also change the short-term structure to a different one, but the overall trend will be maintained, just maybe in some cases after the news. Okay, so we look at a possibility that this supply in this territory was out because of this CPI, and once price starts continue going up, I will be looking for bullish opportunities. But however, another trader may just be waiting for a reversal back before he can then look for sell opportunities. But meanwhile, I was waiting for this opportunity because I knew that, I remember vividly, because CPI happened here. All right, CPI happened here. A lot of things went on here. Okay, so I remember vividly. So for this one here, I do not have any memories of what happened here because I didn't keep track of this one. All right, so you don't want to be doing that on a trading day. You don't want to be starting your trading day that way. All right. Okay, so for this one here, we go back to this example here, and remember we have CAD and we have USD news coming in on New York session. All right, so overall trend for this one has been bullish. Okay, so what I want to look for is, I want to look for structures. Okay, I want to look for structures, the ones I remember. Okay, the ones I remember, and I'm going to go ahead then remember all those structures. All right, it's not going to change. Structures don't change. One of the biggest mistakes traders do in a trading day or the start of the day or a certain period is they expect that structures change just randomly. Okay, if you have price going up in such a manner as maybe here, you don't want to start shorting here randomly. You don't want to start shorting because of just one candle. You don't want to do that. You want to trade based on structure. Okay, I remember vividly we took a sell trade on USD CAD. We hopped off here, and we were done. Okay, as well, you also want to picture in your mind, where do you think is a possible area which the large players, because one of the things that move the market more is large players. Okay, where will they possibly look for a target? All right, say we have a trade setup such as this one. All right, say we have maybe we have a ranging market. Okay, let's say we have a ranging market of about, let's say 50 pips. Okay, 50 pips. Okay, we have 50 pips ranging market. Just any normal ranging market, not looking at any structure. This can break to the upside or to the downside. All right, if market would break, okay, let's say we have a range of, let's say 250 pips. Right, let me use that because it's much beautiful. Okay, you would expect that a smart money or a large gun will take a technical trade here. He will take a technical execution and a technical exit here. All right, what I'm going to do is I'm going to wait for a breakout. I'm going to sell at the breakout. Okay, risk is going to be the high of the range, 250 pips. Okay, and I understand that reaction is supposed to produce the same amount of action, is supposed to produce the equal amount of reaction. So in my B to the downtrend, I would aim at 250 pips first, because this was action that should create an equal amount of opposite reaction. All right, so this happened on Monday, Tuesday, Wednesday, Thursday, and we hit 250 pips. Okay, 250 pips. Profit has been hit on Thursday. Today is Friday, and I'm waking up to see that we are here on 250 pips. What do you expect? All right, for me as a trader, for me as an experienced trader, I will not look for any sell here or neither a buy. Okay, I will avoid this market like a plague. I will avoid this structure like a plague. All right, because I know that for sure, or for some certainties based on experience, whoever sold here to get out of this range is out from here. All right, so what is happening here? We could be having less of volume. All right, here, having less of volume here, and we could see that price could also do a little fake out, just maybe in the bid. You can understand that if you have a truck, all right, a truck of 8 tires. Okay, so we have a truck of maybe just more tires. All right, more tires. Say we have truck of more tires. All right, let's look at this truck here, and we have tires here, tires here, tires here, tires here. All right, and we have, say, a Ferrari. All right, we have a Ferrari. All right, we have a Ferrari. All right, such as this one here, and we have just that. All right, the time it will take for a truck to make a U-turn as compared to the time it would take a Ferrari to make a U-turn. A Ferrari can make a U-turn, or can make a U-turn, all right, in say 2 seconds. All right, a truck will take more than that. A truck might take up to 10 seconds or 15 seconds to make this turn, all right, in this structure. So what this tells you is the bigger the move, the higher time it takes for price to reverse. Okay, and you also want to have it at the back of your mind that if a contraction took, all right, say you're looking at a possible point of reversal, say in here, all right, say we have a huge support maybe here, all right, we have support here, and during the time market was going down, we have a target. All right, so you want to expect that price would reverse there. All right, say we had 5 days for price to contract here, and in just 1 day, okay, let's avoid 1 day, because a 1 day could turn out to be a week. Say price drops hurriedly in a single day, and then the next day we can have price go up, breaking that range, and that would create as a week on a weekly candle. All right, that would create as a week on a weekly candle. All right, that could also become a week. So all this drop on the daily and out back could also be opening price. Open price could be here, and we could have drop in the day, out in the day, and we continue and then close upward. This could also become a week on a weekly candle. All right, this could also be the week, and the body could be in such a way. All right, say we have 2 days of action. All right, say we have 2 days of action in here. 2 days of action in here. All right, you can expect that market should drop here in a day, and then the next day 2 days, and then goes out. After it probably took about, let's say, 6 days. You expect that if it took this number of days to correct, it would take at most, or at least by rule, 3 days to impulse. If it takes 3 days to impulse, if it takes 7 days to impulse, for an impulse, you can expect that price will take 2 days to correct and then continue upside. No, it wouldn't take that less number of days. Rather, it would take up to 7 days, 6 days or more to correct for the next impulse to upside. So many of the times when price stalls at certain areas, certain traders start to look at reversals because price halts. Price could also halt, take a breathe out, and then continue. All right, so I look at all these things in the morning when I'm looking at it, because over time, experience have given me an idea. I don't just go down to look more. All right, I have experience over time, so I don't spend my energy looking at it more. Okay, and you should also remember that corrections are what it is until confirmed. All right, so you have an impulse, you have a correction. This would remain a correction until price can break above a previous structure such as this one. If price continue in the correction, irrespective of whatever structure you see as support, you can't buy here. Don't attempt to buy here. I don't buy here on the start of the day, because we might also have it that whatever could also be creating this drop could also be as a result of no demand. Okay, no demand. And no demand could also continue lower until demand sets into that currency. And one of the things that brings demand to a currency would be the news. All right, say we have a news coming during that time. Okay, I pointed out that the start of a wave 2 mostly is the start of the wave 2 is mostly on bad news. Okay, on really bad news is when wave 2 starts. On really bad news, okay, say you have really bad news coming in on USD, really bad news, terrible news, all right, news that you believe USD would not break the rate. All right, that's when large players steps in and then start the next wave to the upside, because majority will be looking for sales right around here and you're cleared, sales right around here and you're cleared, sales right around here and you're cleared, sales right around here, you are cleared. So you are then selling to them the large money and they're buying from you. So at the point which you realize that you're done selling or you're out of money and then you want to start buying, and you can see the large money could also correct and then start selling to you, and you buy here at the top and a correction comes in and they're selling back to you and you are out of money. Okay, it's a very big mind game, guys. It's a very big mind game. Meanwhile, we remember we had support here and we have price moving down, all right, to correct for the next impulse, and they're done. You're done here. You don't have any money to start selling again, because you were selling here and price was going up and you were stopped out and you start buying here more and price corrects and you're selling and oh gosh, man, that's crazy. All right, and at the point you realize that price is reversing and you start selling and market starts going up, okay, and you're selling, it's going up, and you're selling here and it's going up, and you're selling, it's going up, man, you're out. All right, so you've lost in the upside, you've lost in the downside, and you've lost in the next upside. Wow, man, that experience could be crazy. Man, sometimes you can't even move out from your house. You'll be looking at your chart and then hoping. All right, you don't want to put yourself in a position where the market would slap you all through round. All right, market would slap you and beat you up. All right, the market, most times I tell traders that the market have no respect for you. Okay, the market is there to take your money if you give it to it. Okay, the market will take from you when you give it to him. All right, you don't want to be giving too much to the market. All right, many of the times I remember when I started trading, it was difficult for me to do this, but over time I get to do it because of experience. Okay, so in the morning there are certain trades you need to avoid, all right, because of some setups. Okay, you have trades in a very key environment. That is where you want to start looking at. Looking at it means not taking a trade. You could be looking at it and waiting for validation. All right, you want to see validation, you want to see confirmation. Okay, trading is like driving. Okay, you're driving on a freeway and just because a car in front of you showed a blinker, a red blinker, that it want to turn, all right, doesn't mean you want to start pulling off in the front of the car. All right, you're gonna be knocked off, you're gonna be hit by that car, because it just gave you an indication but not a confirmation. All right, the confirmation is you want to see the car slowing down and you want to see the wheels turning in that direction. All right, that's trading for you. It's as good as what it is. Okay, you want to see breakouts, because those are the most powerful entries which any trader can ever take. All right, you want to be seeing breakouts. If you're trading this sort of breakout in the start of a new day, a contraction, and you put your buy stop here above this previous high and your buy stop is here, and you're trading this breakout, it's going to be powerful. At that point, you're going to be expecting that your risk is going to be here 48 pips, and you're going to target the very first target you must target as a trader should be the top of that structure. What created the structure? You should be able to look at price, you look at the structure and ask yourself and answer one question: what created the structure? Because you look at more of first, action equals reaction. Okay, I look at more of actions equal reaction. You want to ask what action took place, all right, and whatever reaction should occur should be equal to the length or the amount of that reaction at first. Here you want to look for targets. First 57 pips, and you look at your risk. which is going to be down here, 43 pips. That is 1:1.25. All right, it's more than 1 because you have 43 pips down here, 10 pips gap, say 46 pips, you have 58 pips here, and you have 1 more than 1. First, the next target you want to be looking at, Fibonacci extension for this kind of setup here. And the very first Fibonacci extension you should be looking at here is what I call the extended Fibonacci extension, which is the 127 Fibonacci extension for a target. For a trade such as this one here, you've captured TP1, TP2, and you are gone for that trading day. This is a trading day. All right, this is a trading day. You are gone, you are gone, you are gone for good. You've captured 1, you've captured 2, and you are gone. As a trader, day trading, you are gone. Don't be back into this market. Don't be back into trading USD for the day. All right, for a 1 standard lot on this one, 50 pips, man, that's $500. Another 20 pips, 70 pips, that's $700. You're out for the day. That's $1,200. For a 0.1, that's roughly, give or take, $120. You're done. All right. You don't want to come back here on the same trading day, possibly on a Friday, such as this one here, and then start looking for counter trend, or you want to take this target and you want to start selling here back. No, you don't want to do that because price is going to go sideways for some time. The large player or the smart money that created this move, they're out. Whatever is happening here, you can see it's randomness. It's the whole randomness for some time before the next new direction comes in. It's the whole randomness, which tells you that the large player that created this move here saw an opportunity here and then left here on this and then waited the whole time to take the next trade back at this point here, the next trade back inside of this territory, because this has now turned into support. They wanted to see where price would respect the next. It's a trend, it's a bullish trend. You want to look for bullish opportunity, so where is the best opportunity to look for? You don't want to start selling in an uptrend. All right, many of the traders attempt to do that. All right, they could be saying, I've seen a lot of traders say overnight millionaires, I want to make money up and down in the market, I'm going to make money in buying certain asset, I'm going to make money in selling certain asset. No, that's the dumbest thing to ever do as a trader. Who does that? Market participants or the large players, you are competing against one of the greatest minds in the world. When you're trading, you are competing against one of the greatest minds in the world. They're smarter than you. They're smarter than me. What gives you an edge if you keep consistent trade setup and consistent target? Taking consistent trade, consistent target will give you consistent result. This could have also been a bad trade, right? For the day, I could be looking to buy here and price comes up here and then returns back and then hit my stop loss. That's fine. It's trading for what it is. When that happens, you would understand that this is now a correction and that the major degree trend is not yet complete. One of the things people overlook is this. I'm going to tell you guys. I'm going to tell you guys that this is what people overlook. In a certain move on a day, when you find market moving more in a particular day, don't take a counter trend trade irrespective of whatever structure you find. Don't take a counter trend trade on that market for that very day. It has a 40% chance of reversing with whatever momentum that occurred in the low. Demand here high. Man, you don't want to do that to yourself. You don't want to do that. All right, you don't want to do that. All right, you don't want to do that. Okay, say in a certain time frame, I wake up in the morning, London session. All right, I wasn't aware of what happened during the Asian session. I woke up in the morning and I find out in today that we've seen price go up say today, I look at my indicator here. Today we are still at 0.19%. Okay, that's a good move. I can also continue that move to the upside. All right, if I had a technical setup to back it up. Okay, we've also gone up 0.33% for the day. All right, so I would then also look at what is my ATR for the week. You don't want to be taking a trade. Okay, say you want to buy Euro USD. Okay, and you had from Monday, Tuesday, Wednesday, Thursday, Friday. Okay, Thursday, and on Friday you're waking up on a Friday, and during this time we've seen Euro move up 300 pips, guys. 300 pips for Euro. Would that be a very good trade for you to still continue buying Euro on a Friday? You want to buy into 400 pips movement? No, you don't want to do that on Friday. You can expect that on a Friday that Euro would be looking for some sort of relaxation. All right, it could also relax. It could also use a 30 pips range to correct for the whole of the day, or it could also reverse a little bit into close of the day, and you can also have it that at the end of the trading week, the weekly candle will look such as this one, and a very long week here. And the next one could also continue, start filling for the next week and continue going up. Okay? These are certain things traders should be conversant with. With the help of this structure or this indicator here, it should give you a guide. Okay? You have every currency, every instrument having a certain level of ATR. What is ATR? Average true range. What is the average length that could be covered, or an average travel area that could be covered by that asset? Okay, so you don't want to be selling when you have a potential of USD strength. You don't want to be buying NZD USD. All right, you don't want to be buying AUD USD when you have potential setups for DXY strengths. Okay, so in such a market mode which you have DXY with a great possibility of strength, you don't want to be doing this to yourself. Okay, you don't want to be doing this to yourself, guys. And in a market such as this one here, you would understand that what makes up a currency pair is a combination of two currencies. That's what makes up a currency pair. All right. For a strong day for USD, you can expect that Euro should be weak against USD. You might also be having that Euro could be strong against maybe CAD. Just maybe CAD. CAD could be having a very terrible day. All right, we could having that CAD could be having a terrible day, and we could be having that JPY could be having a terrible day, but USD is strong. Okay, you don't want to be in a day such as this one here. You don't want to start buying. Okay, you want to buy Euro USD. All right, and you want to buy, and you want to sell. You want to sell Euro JPY. No, you don't do that. All right, because JPY and USD are safe haven assets. All right, this should be going in one direction, but not the same strength, but could be going in the same direction. Okay, so for a trading day, you would find it that if we have Euro USD going up, we might be having Euro JPY just maybe sideways, or more of slightly off a little bit by maybe 0.00 or 0.01%, 0.02 up to 0.10%, maybe down, but just slightly. You won't be having such a big move, right? Every market will follow its turn. All right, so you want to look for the best time. All right, so you want to look for the best time. You want to plan your trade and trade your plan, and instead of like this, you want to look at buying Euro AUD. Because of AUD weakness. In risk of market mode, Euro AUD will be going up. Euro NZD will be going up. All right, you can see that reflect here. On weekly trends, we have 0.47%. GBP, NZD 0.35%. Euro AUD, Euro NZD 0.47%. On the day, we've moved 0.45%. And you know, that also happens. Okay, so it's one you should understand what instrument you should be trading in a particular day. Okay, you want to look for setups. Okay, you don't want to be trading this set of structure now. Okay, let's look at this one here, and then let's look at this one here. We have it that price for GBP AUD has a weekly ATR of 261 pips. Okay, let's see. We have the lows here. This way you start counting your ATR. Okay, we have the highs, embedded high. Here's Monday range, Tuesday. We have Wednesday. So here we have 261 ATR. You look at here, starting here to up here, we have 226. We have just about 40 pips upside. You can still continue riding this one upside. It's still a good trade. However, I'm still in the trade here because I hopped in here. Yeah, I hopped in here. It was a very nice one. It's in the trade. I'm hoping to get out around this point here. I'm not looking at this week. I'm looking at probably next week, this completing 1.89 territory. Go ahead and look at my previous video. I pointed out. All right, so that's how you take a trade, and that is what I look for in order to be able to take a very good trade in the morning. Morning is the best time to plan. You know, when you're having a good day, start of a good day, you have it till the end of the day. All right, you want to be having a crazy day, and you want to be taking trades after a pullback. Okay, after a pullback, the best time to take a long trade should be after a pullback. A pullback and that breakout, you should understand that it will be powerful. Powerful breakout. Powerful. All right, see you guys next time. Thanks for tuning in, and I hope this helps and also improve your trading. It's Wayne Michael here, and the best thank you is to subscribe, like, and also share with friends that also having difficulties in order to be able to point out how to set up in the morning for a winning trade. All right, so see you on the next video on how to identify losing and winning trades in the start of the day. See you next time. I love you all. Subscribe, smash on the notification bell, and then I'll see you in the next one.